a new phenomena is taking the world by storm. But what exactly is it? Well, in this series, I seek to find out what, why, and when this new phenomena will affect my everyday life. I'm going to start my journey by finding out as much as I can from people who seem to be in the know. I'm visiting London's blockchain event, whatever that is, and I'm going to chat to people who are experts in the field. And I want to find out what some of the terminology means, like hodls and miners. And I'm going to start the journey where our money is traditionally held. And that, of course, is the Bank of England. Here at the Bank of England, business progresses as usual. Its focus is on the UK economy, interest rates, and controlling inflation. The concept of assets gaining in value at a rate countless times higher than traditional currencies is beyond their remit. Yet, just months ago, one prominent newspaper journalist suggested the gift of cyber currency for Christmas. I mean, whatever happened to Amazon vouchers or this good old universal voucher?
Perhaps I should start where there seems to be a little more action. At London's blockchain event.
I'm here today in the heart of London at the 4th annual blockchain exhibition and conference. It's been over in San Francisco, it's been in Hong Kong, it's been in New York, and now it's back here in the heart of London. Never before has there been so many industry experts and innovators within the world of blockchain and cryptocurrency in one place at one time. So it's a perfect opportunity for me to go and meet some people, to ask some questions and find out why it is that so many people are getting involved in investing in cryptocurrency. I want to find out, is it safe? Is it evergreen? And therefore, is it something that I and you should get involved with? I'm a bit of a noob. You know, this whole cryptocurrency thing, I've been hearing about it for a long, long time. Tell me, what is Bitcoin first, and then maybe what is cryptocurrency?
Okay, well, Bitcoin is a digital currency. It was the very first one. That's why it's the most famous.
So the first problem that a cryptocurrency has to solve is called the double spending problem, which means, you know, you send someone an image, and then you send that person, someone else, that same image. You actually just copy the image. So if I was to send you a digital coin, how do you know you haven't just duplicated it? So to solve that, they've actually created algorithms to prove that you are actually sending the original electronic coin, if that makes sense.
And the cryptocurrency world is something very new and exciting because it's all about blockchain, the blockchain technology, and it's something that's going to really change the way we do finance, the way we deal with money.
So what is blockchain?
So blockchain is basically a technology that has been developed, and the idea was for the security and privacy. And so you can think of it as if you're in a community, and this technology, what it does is it has a transaction, it has a way to communicate with each other, it has a way to transfer information with one another within the secure community. And this blockchain, what it does is it can be developed in many different formats. It can be provided for many different products, for security tools, different things.
What a blockchain introduced to the world for the first time ever is the whole concept of having digital immutability. Being able to take something out of the physical realm and place it into the digital realm and retain ownership over that. And it was Bitcoin that introduced this concept to the world, and to this day arguably does it the best. So if we look at examples of what that means and why that's powerful and why that's relevant, if you look at the movie industry and the music industry, When it was taken from physicality and placed into the digital sphere, artists could no longer retain ownership of what it is that they produced. The whole business model behind these industries had to change. Now they're relying on subscription-based services, Spotify, Netflix, etc. to stay relevant. Artists now have to go on tour in order to earn a decent income or rely on advertising deals, etc. So as soon as something is taken out of the physical realm and placed into the digital realm, it's very difficult to retain ownership. The way that blockchain technology does that process is by having all of these different groups of transactions. So in Bitcoin cases, what you have is 10-minute windows. So in a 10-minute window, you have all of these transactions and all of this data being grouped together. And they get stamped in 10-minute blocks. And then they are chained together through this process of mining. So as long as this process continues, you have a whole historical record since Genesis of every transaction that ever took place on this platform and on this network. And that is the digital equivalent of writing something in granite and locking it away for eternity.
Okay, that seems helpful. So how many cryptocurrencies are there?
An exchange is where you can basically go to buy all these different types of currencies. How many different kind of cryptocurrencies are there currently in the market?
So there's about 1,300 plus. There are more launching every single day. You'll hear obviously about all of those here. There are lots of ICOs going on, and that's just continuously building and growing. There are obviously different tokens as well. There's a difference between a token and a coin, and they're all listed on our site as well.
So hang on, explain that, because I heard that term earlier when I was listening to one of the presentations. What's the difference between a token and a coin?
Yeah, so normally a token runs on another network. So say, for example, OMG or IOTA run, sorry, not IOTA, say OMG or EOS currently actually is on Ethereum, which is another network, but eventually they'll have their own, potentially their own blockchain. So basically a token runs on someone else's blockchain.
Wow, and I thought there were maybe a dozen or so. I'd really only heard of Bitcoin until recently. So if cryptocurrencies are digital currencies, what am I used to and how do they compare?
The massive difference between fiat currencies and a currency like Bitcoin or a payment system like Bitcoin is one is of the 4,000 fiat currencies that have ever been created by government, they have a 100% failure ratio. The average lifespan of a fiat currency is actually only 27 years. So we have to question ourselves and ask ourselves, what is the actual role of a fiat currency? Is it there to liberate or is it there to enslave and to hinder? Also, the issuance mechanism is completely private. Central banks are not actually run or controlled by the government. They're private institutions and no one actually knows who the true shareholders are behind these institutions. What blockchain does is addresses that with true and utter transparency. And that is what Bitcoin introduced to the world is financial neutrality and financial transparency. A huge difference between fiat currencies, which are government run, centralized and decentralized technology, such as Bitcoin.
Will it eventually replace normal currency? And by normal currency, I mean, having my coins in my pocket, having my notes in my, in my wallet. Will it replace that eventually?
I am not sure, because of course there is risk. Bitcoin itself as a value, it's unstable right now. There are problems with scalability and they are trying to fix it. But, and of course, I call Bitcoin the communist coin. I call Ripple more the capitalist coin. It's a funny thing, but it's not stable right now, but it's going to be evolving. And I think the best thing about these ICOs, these cryptocurrencies, yes, there are scams, but there are some that are not.
Most current investors in cryptocurrencies seem to take the view that while they may dip in value from time to time, perhaps significantly, they're definitely here to stay, and the long game is therefore to hold them for their future value. But how much might that be? Tim Draper, the founder of Draper Associates in San Francisco, is a cryptocurrency billionaire. He was an early investor and remarkably predicted to the exact month when bitcoins would reach a value of $10,000. But he's also quite surprised at just how fast values have increased since then. He and many other entrepreneurs in San Francisco from those early days know from experience that there's a lot to be made from cryptocurrencies if you get it right. Talking about their value and use in the future, he's gone on record saying that in 5 years it will be commonplace for people to use cryptocurrencies in everyday transactions instead of money as we know it. Now that's an interesting thought.
I believe it's difficult for people to grasp what this space is all about, what cryptocurrencies and blockchain technology is all about, because it really is a completely fresh idea. It's a completely new take of how we engage in commerce. A perfect example of that is it challenges us and it makes us revisit what is money's role in society. And then we have to look into what is our interactions with money as well. And money up until a blockchain era was something of personhood. It is one individual sending money to another individual or a collective of individuals trading underneath the banner of a corporation. So in blockchain and in cryptocurrencies, that changes. We can now have machines that own money. So to speak to an everyday average individual who's not tech-centric or even financially centric, and expect them to grasp all of these different terms and these acronyms and to take that and consume that straight away is a tall ask and a tall thing to expect from somebody, which is why there are companies out there now who are dedicated towards this space to help make it more palatable to your everyday individual.
How far away are we from actually seeing Bitcoin being used on a day-to-day basis by the average man and woman on the street?
You know, I think there's still a long way to go. Yesterday there was the first pizza test, so someone bought a pizza with Bitcoin. They've been doing that before, but they bought it with the Lightning Network, which is a really fast transaction network. And I think that's one of the issues right now. So transaction speed, so how fast you can transact and the number of transactions is a limitation with Bitcoin and with Ethereum right now. And they're fixing those things. And then when those fix, they can get faster and faster, and then you could have everyday adoption. So for example, Visa processes about 24,000 transactions a second, whereas Bitcoin's obviously a lot less than that, like a lot less than that, and Ethereum as well. So they couldn't handle the volume of transactions that Visa or MasterCard could handle. So they're building these new technologies, like the Lightning Network and Casper and things like that, which are coming up, and those are going to fix and change the code and actually allow more transactions. And potentially, obviously, allow wider adoption of cryptocurrencies. I think another thing which is inhibiting that is, you know, if you go and buy a coffee, you know, it's very hard to pay in cryptocurrency. But there are a lot of new debit cards coming out as well, like Kasha and things like that. And they will enable people to obviously have cryptocurrency and then pay with that actual debit card that they get issued with, whatever cryptocurrency they want, and the transaction will be immediate.
I would say that already there's places, for example, I know a specialist car company that would take payment by bitcoins and other larger cryptocurrencies. So there's certainly already happening, and hopefully it will increase to go on a bigger scale. I think the difficult part is being the processing of the payment, but as far as how some companies can work, they can certainly take the payment and it can be converted into fiat currency to exchange for a product.
This raises a very interesting point. Why would someone want to use their cryptocurrency if there's the opportunity for it to go up in value by dramatic amounts, as we've seen over the last year? And this is indeed a very poignant question. Although the first cryptocurrency, Bitcoin, was created to serve a purpose as a fully fledged currency for many, it is now being purely used as an investment vehicle.
You know, the long-term view is very bright, and you know, we want cryptos to continue moving on forwards and upwards, and to people continue getting involved in it. It will certainly make a difference. I think if, you know, for example, you're trying to save money, which is very difficult these days. If you've got a chance to invest in a coin that could be worth tenfold, or, you know, look at Ripple a year ago, it's gone up 3,000% that could open up massive opportunities for people in their own way, in their personal lives, let alone the institutional world. So I think there's a bright future for it all.
An ICO is something that's called an initial coin offering. It's the ability for a business or a project to essentially tokenize their project and receive funding directly from the crowd itself. It is the blockchain equivalent of IPOing a company. Only difference is you don't need an investment bank, you don't need a law firm, and you don't need to go through the traditional hoops that you may have to have went through, or the friction points of going down the traditional fundraising route for an IPO. So again, this is a perfect example of asset tokenization and how this is revolutionizing how companies seek funding.
In this episode, we've discussed cryptocurrency as a utility, serving the purpose of becoming a globally accepted currency. But as we've discovered, for many, this is not the primary reason for getting involved with the movement. For a huge percentage of those getting involved with cryptos, they're doing it for the investment opportunity alone. In the next episode, we'll look at this in more detail, discussing cryptos as a real, viable investment.
In the crypto space, an important time is now. It's got the awareness. People have seen fluctuation in bitcoins from an investment point of view. People are starting to learn that things don't go up in straight lines. We don't expect them to.
If we hone in on Bitcoin's case, what the miners are there to do is ultimately to secure the network. Because if we have introduced the concept of digital immutability, how do we maintain that digital immutability? The miners are fundamental into that process.